A new emperor has emerged in the United States, with more power than John D. Rockefeller ever had. And while it might sound like a conspiracy theory, it's actually a growing concern, shared by the world's most influential investors. Today I'll tell you how Larry Fink, the CEO of BlackRock, became virtually the emperor of the United States. In 1975, Jack Bogle founded Vanguard Group, an investment fund specializing in passive investment. Passive investment involves precisely tracking the behavior of an index so that those who invest in one of these indexed funds achieve the same returns as the underlying index. Vanguard popularized this form of investment, and Jack Bogle earned the title of the father of index funds. Because passive investment, despite everything, yielded better returns than many fund managers on Wall Street, and it was cost-effective in terms of transaction fees, accessible to anyone, with Warren Buffett consistently recommending it as the best investment option for most people. However, everything began to change when these types of funds shifted from being popular to becoming massive, with Vanguard, State Street, and BlackRock collectively controlling nearly $20 trillion in assets, radically altering the investment landscape. In 2019, Michael Burry warned of a bubble forming in indexed funds. His thesis was that as more people invested in indexed funds, more money flowed into purchasing companies in the S&P 500, NASDAQ, and Dow Jones indices, which in turn drove their prices up and attracted more investors. This, in addition, led to a situation where many underperforming companies experienced high demand simply because they were part of an index, causing their stock prices to rise. An observation not only shared by him, but also by other investors like Bill Ackman. Because in a passive investment strategy, where one simply buys the stocks belonging to the index, there is no room for individual decision-making regarding overvalued stocks. And this lends itself to mediocre executives remaining in their positions because their company's stock price rises, but only due to demand generated by being part of the index. However, paradoxically, indexed funds have been shifting from their passive nature to becoming increasingly active investors, seeking to influence the decisions of the companies in which they hold positions. This makes the concept of a completely passive investment strategy perhaps more desirable, as now that they adopt this active stance, the immense power they have amassed has become evident. If you look at the majority shareholders of the main companies in the United States, you will come across three names again and again: BlackRock, State Street, and Vanguard. These three funds are the majority shareholders of 88% of the companies in the S&P 500, something that hasn't gone unnoticed, and even Charlie Munger himself has warned that we have a new bunch of emperors, and they are the people who vote the shares in the index funds. And more specifically, he has mentioned Larry Fink, the CEO of BlackRock, of whom he has said, "I think the world of Fink, but I am not sure I want him to be my emperor."
For a while, all these index funds got the feeling they were suddenly made godlike to clean up the world. But Vanguard has retreated from that policy, and I think wisely so. And I have some hope that Larry Fink will follow. I don't think it's smart for these index funds to try and influence the policy and politics of the country.
Although for many, this might sound like a conspiracy theory, if someone like Charlie Munger issues this kind of warning, it's important to take it seriously. These funds have started to act more actively, pressuring the boards of directors of the companies in which they have invested. But they haven't used this pressure to ensure that the companies are being well managed, but rather to carry out an agenda. The motives behind this agenda are not clear, and there are primarily two possibilities regarding this. The first is that they want to exert control, that is, to use and test the extent of this immense power. And the second possibility is that they want to attract millennial investment. And for this reason, the nature of this agenda has been progressive, focusing on environment, social and governance, or ESG. They have pushed companies to take steps in the direction of improving these indicators. However, as you can imagine, this has been widely criticized for its lack of consistency and superficiality. Elon Musk, for example, is one of its strongest critics, partly because Tesla has an ESG rating lower than that of Philip Morris, the cigarette company, and he has even said that the S in ESG stands for satanic, not social. And whatever the case may be, they have generated significant concern about the power these funds are accumulating, which could continue to grow in the future. Before I tell you what could happen with index funds, remember to subscribe to remain informed and support the channel. Determining the future of indexed funds in the very long term is complex, especially because it will depend on countless factors such as the evolution of inflation, interest rates, and by extension, market behavior. If the S&P 500 maintains a similar performance to decades past and delivers an annual return between 8% and 10%, then indexed funds will continue to grow. Conversely, if interest rates remain higher and meet the expectations of many analysts who anticipate low growth in the coming years, then the S&P 500 might yield lower returns compared to instruments like bonds and certificates of deposit. This could lead to a decline in the popularity of indexed funds, and consequently, these funds might lose decision-making power over U.S. companies. Another possibility is related to Michael Burry's analysis, where he views the rise of these funds as a bubble that, if true, could burst and impact index performance, the assets managed by these funds, and people's interest in them. A third possibility, which is already happening to some extent, involves granting direct voting rights to investors of these funds regarding decisions made by the companies in which they have investments. BlackRock, for example, has initiated a program to provide voting access to about half of its institutional clients, granting them influence over the decisions of the companies they've invested in through BlackRock. What do you think? Do you believe these funds will continue to grow and Larry Fink will accumulate more power? Or do you think the government will intervene as it did with John Rockefeller's Standard Oil? I'd like to know your opinion. And if you want to learn about our analysis of the phenomenon that will influence the economy and markets in the coming decades the most, I recommend you watch this video next.